Starting the last panel discussion of the day, that is India's growth experience and South Asia. So, chairperson is Dr. A. Panagariya, chairman of the 16th Finance Commission. And briefly, I may mention his biodata. He has served as the first vice chairman of the Niti Aayog. During these years, he also served as India's G20 Sherpa and led the Indian teams that negotiated the G20 communiques during presidency of Turkey, China, and Germany. Professor Panagariya is also a former chief economist of the Asian Development Bank and was on the faculty of the Department of Economics at the University of Maryland at College Park from 1978 to 2003. During these years, he also worked with World Bank, IMF, and UNCTAD in various capacities. He holds a PhD degree in economics from Princeton. In March 2012, the government of India honored Professor Panagariya with Padma Bhushan. So, sir, I hand over to you for conducting the session.
Speakers. The theme for the panel is India's growth experience, and that is the overarching theme. But I'm quite happy as a trade economist if you want to practice your comparative advantage and speak on issues that are related, maybe not necessarily directly on growth experience. I think we have Professor Pinaki Chakraborty here. He clearly is an expert on public finance, and he'll probably speak about federalism, fiscal federalism, and similarly maybe others too. I'll just mention the fact that I study India's growth very closely, but unfortunately, I can't speak with equal knowledge on the experience of South Asia. But India certainly has been growing very rapidly after having had 4 decades of very slow growth. Once the economic reforms were carried out and India turned to a more outward-oriented market economy in the last 20 years. This is something people don't realize. In real dollars, Indian economy has grown about 7.9% a year. If you do it in real rupees, growth rate is a bit lower. But if you convert it, because rupee has been appreciating in terms of the dollar in real terms, and that of course accounts for some extra 1% plus growth, bringing the average annual growth to 7.9%. India's ambition today, of course, is to, by the 100th year of independence, 1947 or 2047, to become a developed economy, developed country, Viksit Bharat. And there's a lot of excitement around that. A lot needs to be done, but a lot of good prospects as well. So those are my remarks. Since we do have 4 speakers, I would not take any longer, and we'll bring in our speakers one by one. So our first speaker is Dr. Charan Singh. He is the CEO of Egrow, and he is the man responsible for bringing me here. 100%. I have not been really going to many of the events because not only the Finance Commission really requires more time than I have, but it is also an institution which generally is a low-profile, neutral institution, and so I try to maintain that tradition and not be too visible outside. But it became very hard to say no to Dr. Charan Singh. So here he is. He now pays his dues for it.
Thank you so much, sir. Thank you so much. And if you recollect, I came to you requesting you after your book was published. the fantastic book that has recently been published. I would recommend anybody who's interested in knowing India's growth story should read his recent book that has just been released. It's a voluminous book. You will see through it that there is lots of hard work, the footnotes, the endnotes, the appendices, and the analytical rigor that the book has without using a technical jargon. That's the sign of a wizard, sign of a genius, that they can explain to you complex issues in very simple words. So I would, and if you want to get a glimpse of what is in that book, Egrow has a webinar recently done the last Friday. You can have a look at that. And you will realize that when he is cheering, why we requested him and persisted that he cheers. And then you will also realize when he is cheering, how difficult it is to speak in front of him. So he's right. It's a challenge. But let me do one thing. I'm going to take just 5 minutes and I'll share certain thoughts. And then, of course, I think at the end of this session, you'll get a very good complete picture. That is how the panel has been selected. India's growth story actually is a very long story. And I'm borrowing this from Dr. Panagariya's book. It's a very long story. How we moved into the mixed economy is really something worth pursuing. And that is where the first Prime Minister of India, his ideology and his thoughts would come in. So let me put it like this. India pursued a mixed economy philosophy for a very long time. It started before the independence. It continued with independence. It continued through the Planning Commission. Our growth rate, as the chairman just mentioned, was very, very low. He has given the details in his book. We were around 2 to 3%, very well known the Hindu rate of growth. Our per capita income was growing hardly at 1%, 1.2%, very, very low growth rate. Though many things happened between 1951, when we started our planning, and 1991. People changed, personalities changed, but the mixed economy thing did not change. Prime ministers came, they changed, and still the mixed economy thing persisted. 1991 happened. Everybody thought there's going to be a sea change. We had the new prime minister, we had a very learned finance minister, and yes, opening up of some of the shackles did happen. But did we move away from the mixed economy? That question you can ask. Anyone in India can ask that question to one's own self and think, are we ready for a market economy? Have we advocated market economy? Do we really understand the implications of a market economy and recommended it? No. We have, including myself, have always been advocating subsidies in some form or the other, if not agriculture subsidies, water subsidies, and what all not. So, while 1991 was a disaster, and we all know the reasons, need not go through it, it was a great opportunity. That opportunity was taken up, but that opportunity did not take us away from our mixed economy ideology, sadly. We continued it, we tweaked it, we tinkered, we did many things. Did we ever think that in 1969 and 1980 we had nationalized our commercial banks, we had nationalized insurance, we had nationalized State Bank of India way back in 1950, 55? Did we think that we can now privatize these banks and institutions? I remember about a couple of years back, I was toying with this idea while I was at IIM Bangalore. And then I wrote on it, and it was not really received very kindly. It's much later I realized that in the Niti Aayog, same thought was going on, and you must be aware of the big discussion that took place. So I don't want to dwell a lot on that, but I want to mention that from 1991, when the reform started, we didn't move away from it. Unfortunately, from 2004 to 2014, when we thought again privatization, market economy will take over, it did. Rather, there was a paralysis of reforms. The mixed economy ideology continued throughout. 2014. Now, one starts thinking, is there a paradigm shift? Is the market economy coming back? The argument that was given from 1947 that our industry is still in the infant stage and therefore needs some support and subsidy, and our agriculture, because we had the agriculture food shortage early in 1960, and because of the drought and what PL 480 did, we had to bring in the Green Revolution, and of course we became food totally sufficient. But did we think in terms of market economy? An attempt was made. That attempt, for some reason, couldn't succeed. That's okay. But an attempt was made to bring in market related reforms in the agriculture sector. So you see that the thrust has been changing. The reforms are now deep, and there is a probability, there is a chance, there is an effort to dig deep and realize, can we really go ahead with a market economy? As the chairman mentioned, the per capita income as well as the country's income is now performing very robustly in dollar terms, 7 plus, even if in the Indian rupee it is 7 plus. There has been a sharp increase in the per capita income. The question that arises, and before I come to COVID, as I would close at that point, before I come there, the question arises, what has been the thrust of the policy? According to my own understanding, it is the government's focus on manufacturing. Not only on manufacturing, government has kept talking about Make in India, Startup India, and there is government's effort had started showing in the productivity boost in the industrial sector. As we all know, India enjoys a fabulous demographic dividend, and we want to convert this dividend into more productivity and more growth rather than let it turn into a disaster. So the skilling and employment centers are doing overtime. Lots of effort has been done on skilling the manpower and ensuring that the MSMEs, which really provide lots of jobs or have the potential to provide lots of jobs vis-a-vis the heavy industry, overtakes the policy. And that's what has been happening. In recent years, excellent research has emerged from different places, especially IMF, which has shown that female labor force participation, which was amongst the lowest in our country, if that can improve to come to the levels which are global, 55 to 60%, India's GDP can automatically jump 25%. An effort has been made. I have myself done a study with a colleague at Niti Aayog, where we have tried to say how to improve female labor force participation in the country further. But if you look at the latest data, a couple of studies prepared by Surjit Bhalla, formerly DIMF, shows that female labor force participation in the country is improving in recent years. That brings me to a discussion on COVID. While the rest of the world suffered a severe setback on COVID, India did not. What was the key issue up there? And I just want to flag two issues. One is the fiscal policy that was pursued during COVID, with expenditure pattern emphasizing capital expenditure, investment, and higher multiplier. Also, expenditure not happening in a similar single year, but distributed over the next 3 to 5 years. All these, if you recollect, during the COVID time, all these efforts of the finance minister coming on the TV every 3 months, 4 months, clearly showed that they were very particular there should be no wastage of expenditure. While India was ridiculed that our stimulus was far less than what the rest of the world was offering, but one has to be very clear, in a resource deficit country that India is, with only 17% of tax to GDP ratio compared to 35 for advanced countries and 40 for many other countries, we could only spread so much and not more. And I think that laser beamed approach which Indian government followed is absolutely, and I think essentially, responsible for the growth which has happened. The other factor I think is, and I think that's a very important factor, is the monetary policy. The monetary policy of the rest of the world, I would say, was distorted right from subprime, and monetary policy, as you know, has a lagged effect of 2 to 3 years. I think the subprime market of 2003 onwards, the monetary policy in advanced countries were very, very awkward. Financial and banking policy too. After the Lehman Brothers in 2008, we all know how Americans were pumping in money. If you look at the balance sheet of the central bank from 2008 to 2012, the balance sheet of the central bank, Fed Reserve, Euro, Bank of England has gone up 4 times. If all the economic theory that we have been teaching so far and Milton Friedman has to be believed, the money has direct implications on prices. And if the balance sheet expands by 4 times in 4 years, one can obviously expect inflation. It didn't happen, it got delayed. And then when COVID happened, the same thing was replicated. The expansionary monetary policy, inflation had to take place. It so happens the trigger came with the war in Europe, Russia and Ukraine. And as the supply chains got disrupted, I think the trigger happened and inflation shot up through the sky. A 30-year average in America is 2%, so in England, so in Europe. But during this period, when the war started in 2022, inflation rose to 5 times their 30-year average. In other words, it rose to about 10%. Obviously, they had to use a sledgehammer, which they did, and they raised the interest rates. In India, absolutely clearly, our monetary policy was far more responsible. Inflation never shot up to that high level, never shot up to that high level. Post COVID, our range given by the government and the parliament is 4 plus minus 2, translates to 2 and 6, was at the maximum 7 or 8%. Even today, as we talk, it's the tomato prices and the onion prices which distort the CPI. But otherwise, if you look at the balanced view, that's not the case, the type of inflation we are having and the rest of the world. I want to conclude by saying that despite these challenges, the deficit trends are downward gliding. That's something very important. I've already mentioned about the capital expenditure, very carefully calibrated. I want to also say that the capital expenditure that happened was basically on infrastructure, and that means very, very productive with a multiplier effect. The last word on this, I would like to conclude by saying, if you take a comparative picture, inflation in the country is anticipated to be in the range of 4% till 2029. That's the projections made by the IMF. If we look at the growth rate, because of such a balanced, calibrated policy over a period of time, stressing that there's fiscal responsibility, there's monetary responsibility, the growth rate of the country again is projected above 6%, generally in the range of 6.5 to 7%. The external sector, as we know, the Tarpur committees and the High Level Committee on Balance of Payments of 93, we understand that the current account deficit should not be more than 2.5%. And if you look at the projections, that is exactly how it is. The fiscal policy, which I just mentioned about the fiscal glide path, has also been very interesting. There is a correction up there, and that's translating into the debt to GDP ratio, which while rest of the world is now scaling 100% and more, United States with about 133%, who used to come and tell us that we do not know fiscal policy and our debt is too high, are right now above 100%. So is the story with UK, so is the story with France. Japan obviously is a different story. If you look at the fiscal deficits, again, the ones who used to come and preach to us, their fiscal deficits are far more on the wrong side than ours compared to the Maastricht Treaty data, which they only used to come and advocate to us. So, in a nutshell, if I have to conclude, what is the reason for India's robust growth in the current year and the last few years and the next few years? I think it's responsible macroeconomic policy, which has been demonstrated by the government, both on the fisc and the monetary authority. Thank you very much.
COVID and its aftermath. Very, very beautifully put. Thank you, Charan. We now go to Dr. Pinaki Chakraborty from the National Institute of Public Finance and Policy. I understand he will speak on fiscal federalism in India and Nepal, a comparative. But I hope I got it right. Floor is yours. can take this.
Thank you, Professor Panagariya. Thank you, Charan, for inviting me, fellow panelists and distinguished participants. I had a couple of, exchange of notes with Charan, and I thought I'll talk about federalism and try to understand something on state-level growth, keeping in view what is happening in Nepal in terms of the progress of federalism and how Nepal and India compares, and try to bring a perspective on growth on this. Look, so I just wanted to highlight also that, I had the opportunity, great opportunity to work with Nepal's National Natural Resource and Fiscal Commission, and there were interesting developments happening in Nepal during 2008 before COVID, and I understand that there are issues of public service delivery. There are issues of, more decentralization, and there are issues of, having a balanced regional development in Nepal. And I think the kind of changes that has come in after the new constitution, I think it's also about, federalism driving growth. That kind of a discussion, whenever you go to Kathmandu, you do here. So I thought, why not compare both India and Nepal? There are similar issues. When we look at state-level growth, and then talk a bit about the framework of the constitutional framework in India and Nepal, and how the transfer system operates. So there's a broad structure of my presentation. I also wanted to highlight in the beginning itself. I think there are, if we look at Forum of Federations website, there are 25 federal countries, and 40% of the world population live in federal countries. So the federal countries are also large countries. But what we see after, what we have observed after 2000 is that smaller nations, in terms of size, geographical size, are becoming federal and trying to become aspirationally, trying to use federalism as a tool for improved public service delivery, regional development, balanced growth, etc., etc. Two examples I would give. One from Africa, it's Kenya, which has become federal in 2005, and then Nepal after its constitutional amendment, I think in 2011, right? So when we look at, when we talk about regional aspiration being addressed by federalism, I think federalism has a very limited role. So not connected with the growth. Of course, it has impact on growth, but the way I look at it, I would say that federalism is about equalizing federal fiscal capacities, providing public services at a comparable level across the country, and federalism is also about creating necessary public infrastructure. Now, if we say that more public investment is going to bring greater growth in an underdeveloped region, that may be partially correct, but it really cannot happen only through public investment. So public investment has to create an enabling framework for growth. I think when we do federalism as an instrument to promote growth, in many cases, I think this discussion gets very blurred. I think we have to be very careful. I think when we talk about federalism, it is about providing equal level of public services to all the citizens within the country. That's the aspirational issue, aspirational part of the federal context. So we have to be careful when we talk about growth and federalism. So I don't think just federalism can achieve growth. So growth has to happen. There are many factors that affect growth. Now I would also would like to talk about regional inequality, because there is this aspiration I have when I had worked in Nepal as well as, of course, India. We know we have got we are very fond of discussing, debating. We have this issue of North versus South debate. Now, if we look at India's GDP and if we take the GSDP, 6-7 high per capita income states contribute largely, broad numbers, I think around 50% of our GDP. Now, if we say that this has to be divided by 28, so everybody should have equal share, is that possible? It's not possible. So when we talk about regional inequality in terms of growth, and regional development in terms of public service delivery, what is the framework of the constitution? And that is where the federalism becomes very important. And in that context, I would like to highlight the fact that constitutional framework across countries differ. So what are the challenges when we talk about constitutional framework? I think the constitutional framework that we talk about in young federal nations, I think there are they're largely two-tier federal system, largely two-tier. If you look at Kenya, it's the 43 counties and then the national government. There is no state. If you look at South Africa, you will see very vibrant local governments, but states have no power. So middle tier is actually not really a functional tier. It has certain functions, but most of the public service delivery functions are done by the local level. If we look at India, it's a very different story. In India, what we see is the second tier, which is very vibrant, it does 60 plus % of the total expenditure of the government, taking center and states together. But if we look at our local governments have very limited fiscal autonomy. So if we look at countries across country, if there is a three-tier federal structure, one of the sectors will be very weak. One of the sector is very weak, will be not will be. It is very weak. But that's the way the institution operates. So when we compare what federalism can deliver, that constitutional framework becomes very important. Now, I would stop by arguing a couple of issues when we talk about Nepal and India. I think one issue that in case of Nepal I find very interesting and there's a lot that we can learn. I think it also talks about equal sharing of. It talks about natural resources. I think that's an extremely political issue in Nepal. Also because of severe floods and kind of frequent disaster, natural disaster that Nepal faces. I think Finance Commission is supposed to address that. It's an extremely complex subject. So there is something I think more understanding will be very important. I understand Nepal also has a green budget and there's a public expenditure review done to deal with public investment to deal with natural calamities. I think that is something which is distinctly different than India's Finance Commission. Of course, India's Finance Commission has earlier Finance Commission of the 16th, I think 13th, 14th, and 15th were asked to look at climate change. But Nepal's commission is called Nepal's National Natural Resource and Fiscal Commission. So that is one difference. Third, I think the last point that I would also like to talk about is the scale of decentralization. I think scale of decentralization is extremely important. I think this aspirational part is very good. We should become more and more federal. I think we also should understand, if we talk about India, if we are talking about, we have got 250,000 rural local bodies. 250,000, it's not a small number. And we have got 5,000 plus municipalities. Now, if we look at if we say that these 250,000 local bodies will become centers of growth, that's just not possible. So if we are talking about resource investment, we also need to talk about scale. I think at what scale, at what level, it becomes very important. Unless we do that, we really won't get the economies of scale. That's one. Second point that I wanted to highlight in the context of growth in cities. I think India, there is some estimates now happening. And it says that the cities contribute more than some few cities contribute more than 50% of our GDP. City level GDP estimate is becoming more and more important. Now the question is, city is different than a municipal corporation. City is different than a municipality. So when we talk about growth, I think we also need to talk about how we can optimize these resources to these geographical units, which is a big city, metro city, then city, municipal corporation, and municipalities. So I think to ensure that growth happens, that we have to realize the fact that there are sources of growth, and there are question of equitable public service delivery. If we can bifurcate these two and ensure that public services are delivered on an equitable basis, and we promote growth in a way that migration works as a natural equalizer, I think we are good. Thank you very much.
Thank you, Dr. Pinaki, Chakraborty. Very, very interesting observations, and looking at it from the lens of the Finance Commission, some very, very interesting observations were made. In particular, I thought, the fact he mentioned about there being 250,000 rural local bodies. They cannot serve as the growth engines. I think that's really very crucial. As we are visiting various states, and we also then, state gets us to visit some local bodies, panchayats in particular, local rural bodies. And probably they showcase their best ones, or certainly one of the best ones. And when visiting there, one of the questions that has been coming to my mind is that, okay, we have brought these bodies about as far as we can bring them up in this particular structure. So what is going to happen in the next 10 years, 20 years? Where are they going to be? I think this is really, from the developmental point of view, a very critical question, because there is also a reluctance in these bodies to convert from rural to urban bodies. And so this process in India is very slow. Census, of course, has a different definition of urbanization, and so it keeps recording these census towns, but these are not administratively actually urban bodies. So there is a very important actually aspect of a challenge. There is a very important challenge that Dr. Chakraborty here has brought in his remarks. I picked up only one, but there are many others that he brought up as well. So very, very important. So even though he said, it's not all about growth, but some of the very important aspects of growth have actually been there implicit in what in his remarks. With that, let me now invite Mr. Sushil Bhatt, former CEO, Investment Board, Nepal, and former member of National Planning Commission.
Thank you, respected Chair, eminent speakers, distinguished guests, friends from media. Well, prior to completing my term in Investment Board Nepal, a fast-track agency for large-scale investment, I've had good chance to contribute National Planning Commission in formulating 15th periodic plan, and vis-a-vis amongst the portfolio which I had, that Natural Resource and Fiscal Commission does handle formula-based transfer like equalization grant, conditional grants, and formula-based revenue transfers. But beside, in order to operationalize fiscal federalism, the special grant and matching grant, the mechanism, the procedures, the standards was to be made. So I did had a mandate to conclude. So what we did, the preliminary operationalization of grant or fiscal transfer to 753 local municipalities and 7 provincial government. So in total, 760 proponents was a horrendous task. So that we managed, all because we had an integrated platform, web-based platform for seeking proposals from each proponent, that is local municipalities and provincial government. And at the same time, so on federalism, very important thing is the categorization, and from the unbundling report that we have had, the roles or the concurrent and exclusive rights have been vividly mentioned in the Constitution promulgated 2015. But we are now making departure in terms of how best we can manage public investment, enhance allocation efficiency, and at the same time that does depend on the absorption capacity of the recipient of the fiscal transfers. So federal government is basically entitled. I very well agree with eminent speaker's viewpoint that the mechanism does depend on the size and population, or size in terms of area of a country. So for Nepal's context, the project of strategic importance, like be it highways or trade infrastructures or extra high voltage transmission lines or hydropower above, I guess it's 50 megawatt, is under the jurisdiction of the federal government. And during that course of time, we even did stipulation of need assessment, costing, and financing gap for achieving sustainable development goals. And it was clearly demarcated that the private sector has an immense role. So does our constitution, does value private sector to be leveraged in terms of attaining our socio-economic development targets. So the gap that we projected to be garnered from private sector was to the threshold of 50%. So how do we manage that is a big question now too, because basically now from 6 decades plus of experience of Apex planning body, we've been framing or formulating macroeconomic plans. But that does need to be backed up by, because I'm just trying to abide by the experiences that the developed economies also faced, is the lack of physical plan does um, create sort of an ambiguity, and who does what and how is very important. So even on strategic project, the government of Nepal has been, though there is a lot of fiscal tightness for allocation of capital expenses, stands around 21% right now, and which is actually for settlement of all the liabilities that have been already created through the rolling out of plethora of projects will take some number of years. So, but the external loans that we have stands around 44% of our total GDP. We do have space there, but at the same time, it is very important. The project that can generate revenue, service loan should be basically qualify for commercial loans. But once we're graduating from LDC to LDC, will have to be more in terms of commercial aspect. We'll have to look into things through commercial lens. Means its viability aspect has to be well checked. So on that, we've even had a chance to prepare a framework for ideation, conceptualization, developing a project, and even screening them through multiple lens, be it right fitness with sectoral development strategies. So we have project bank preliminary institutionalized within National Planning Commission. And while I was in investment board, the PPP guidelines are already in place. But on PPP, we are yet too traditional and conventional. The sort of a licensing regime we are into, where we offload major risk to the private sector. So what we need right now, need of an hour, is how best we can boost the morale and confidence of private sector, be it domestic private or foreign private. And in terms of the collaboration that we have with Indian sponsors, Mr. Pradumnaji has already spoken some big push project, be it on hydro, as a former ambassador. Sir also mentioned are already aligned into result-based framework with physical progress more than 82%. And on transmission lines also things are happening. So Nepal is at juncture where we are actually, my personal viewpoint is we are setting foundation for economic progress. So that means the borders are being broadened. We're trying best to mirror to the development that has taken place at India end, to ensure that at our end we have ICDs enclosed with ICPs, and we try to instill facilities like dirty cargo handling facilities, private freight terminals, to ensure we have uninterrupted power supply along the industrial corridors. We're building transmission line. To name few, the transways, if I have to speak, Dalgewar, Muzaffarpur was the very basis that really facilitated the trading of power, both sides. And last fiscal year, we were on net surplus exporter, though we used to import, and till date also we've been importing. So it's a dynamic commodity that goes on. And overnight, there are projects which will very soon on dedicated export propositions. The project like Arun 3, Lower Arun hydroelectric project, how I was involved, charting out the execution. That is, the basis is a bankable project development agreement. And so is some projects are under study regime and where things are moving a bit faster mode than the past. So this border infrastructure and economic corridor, cross-border economic corridor, or mirroring to, for example, just if I have to say, we are envisioned the Dodhara Chandani dry port in Mahendranagar, that is Tanakpur, will for sure complement to the backward linkages for Rudrapur also. So that sort of study will now have to be conducted both sides for mirroring. So I'll try to limit to here. What I just want to say is we are in good direction, but at the same time, we'd have to ensure that the project which are in pipeline, different stages of development, if can be expedited, the cost of doing business, and at the same time, not just merely saying we do have these are transformative drivers or sectors with our comparative advantage would not qualify us to be competitive. There are a lot of things that has to go along. The fiduciary role has to be executed well at our end also. I would say fiduciary role. And at the same time, to cut the process, fatness in the process, what best has to be done, SOP approach has to be adhered. So to learn from the experience, I think there is many that we have. And I even know Niti Aayog, there's hot discussion even when the projects are conceptualized. And and at the stage when the projects are conceptualized, the assumed risks are, we delve very detail on those retrospects. So we are trying also to abide by the fundamentals and principle of project or business management. So I would want to conclude for now.
Thank you, Mr. Bhatt. Again, you provided a very good, wide view of Nepalese economy, starting with how federalism works in Nepal, and then coming to the core challenge of the country, which is to build up its infrastructure, and particularly on the border and cross-border transportation, electricity, and so forth. That's clearly a very important challenge for any country at the early stages of development, as India has been experiencing as well. We now turn to our last speaker, which is Dr. Divyendu Maiti. He is from the Delhi School of Economics. Professor Maiti.
Respected chairs, distinguished panelists, and other distinguished audience. Being a last speaker, there has been always privilege because whatever I wanted to speak are already been spoken of. Still I try to bring something that hasn't been raised so far. So far, many issues has been discussed. One thing I think someone before lunch was discussing. India is, having a visions for Viksit Bharat, and along that Viksit Bharat, I think that should take care of the growth for the neighboring countries. So I'll try to touch upon how, let's say, the Indian Viksit Bharat should actually be envisioned with the growth of neighboring countries. Without that, I think the aim for the Viksit Bharat may not be successful. I would like to raise these issues. Um, Now, where we are there, we just, Mr. Singh has already given a perspective of Indian growth, and we have moved from the mixed economy uh, phase to more market-oriented framework that has been approached to boost our economic growth. And so when independence took place, most of the subcontinent where government was distorted because there was no institutions, there was no planning to give a proper plan for the large economy as well as the small economy to carry forward their growth and development. Of course, development issues at that time were quite challenging because South Asia was having the largest source of the poverty, and the famine was quite frequent that time. So the development challenges was quite, prominent that time. Now, only so we that time we did not talk about even the regional cooperations and the regional trade in that way, the way we are talking about. Now, only the regional corporations became quite prominent when 80s onwards, when we see that the Indian economy did not actually grow at the faster rate the way we expected. And then to some extent we realized that some our industrial policies and the labor legislations are much more rigid that require some kind of reform, and we need to give it to the market. And at the same time, we should actually open our economy, and then some kind of agreements, even in the South Asias, were discussed, and that has definitely benefited not only to Indian economy in terms of growth, but also in terms of the development, and that also having a significant impact on at least some of those South Asian countries, including Nepal. I would say, if you look at absolute number of poverties and the share of poverties, that are substantially being declined. Even India, of course, growing at seven or more than 7% growth rate, but at the same time, in spite of the fact that world economy still are in the crisis, Nepal and economies are also growing at a significant rate. So this is remarkable, and that has to some extent taken care of some of those development issues and the social sector issues. That now, where we are there now, I mean, of course, we could not actually solve many of the problems that we have experienced. Now, of course, one major problem that we see that the inequality has grown significantly. Some sectors has definitely taken up benefit from that kind of reform measures, and some sectors are not. And that's also this is not true for Indian economy. This is true for everywhere. If you look at the developed countries as a whole, the trend are more or less similar, and that's also the reason why European economy and other economies has moved towards little bit of protectionism. So keeping that things in mind, I should also let you that when I was doing PhD, when let's say the Indian economy took up reform program, liberalized programs, I was quite vocal in favor of liberalizations. But today I'm going to take the mixed positions, particularly in the context of Nepal, India, the kind of reform that were required. Let me defend my argument. So then what are the biggest challenges? Of course, I talked about the inequality. We know that with the growth, at least the manufacturing sectors or the industrial sectors are supposed to gain. People would move out of the agricultural sectors and industrial sector will give, but that hasn't happened. Rather, service sector has grown. And no development theory talked about that, but we have experienced that. Informal sectors are supposed to fall. It hasn't actually fallen. 80% workforce still under informal sectors. So these are the challenges. We need to definitely address them. But in order to go forward, I think at least the two problems that should be definitely addressed. One, I think Professor Surendra Kumar also talking about the environmental challenges. I want to look at more from the growth perspective. Now, the kind of natural calamities was also hinted by Chakraborty a minute ago, that the natural disaster that has been experiencing in Nepal, that has definitely implications, at least some belt of India, Uttarakhand, Bihar, and we could not actually solve the problem of the Kosi River problem. Without having cooperation, we could not actually solve, we won't be able to solve the problem. So the natural disaster that coming up due to climate change cannot be solved alone. And if you think that we can only grow alone, we cannot grow, because this kind of natural climate change would going to kill our growth potential. Why? Because let's say, do you think we should consider Nepal as a competitor? Why we are not actually opening our at least economic activities? I'm not talking about the political problem. Why can't we really open our economic activities where we have the problem? Now, none of the theories or concept that we studied in the textbook trade theories could not actually apply here. Let's say comparative advantage, we don't have really, comparative, because, Nepal more or less based on agricultural based, and there, if you look at the also agricultural activities, there we have clear comparative advantage. Rather, we could exploit some kind of complementary out of that. Now, of course, there is no competition in neither service sector activities nor manufacturing sector activities. So rather, if we open up, force both Nepalese business and Indian business to engage in competition, then that will encourage to innovate, and entrepreneurship will actually grow. This is definitely, that's why market instrument is very much required in this kind of issues. But now the kind of climate change that are actually appearing, here I think the market instruments may not actually go. There is no private institution in the world has taken care of address of environmental concerns. No problem. So here we have to definitely. Now let's say, even if, already all of you know that 1 degree temperature is going to reduce productivity by 1.5% GDP. We know all that. And that productivity would be low in agricultural itself. So that means India would be, Nepal would be definitely affected, as well as Indian economy is supposed to be affected very much. So that's why, that's the reason, if you want to really grow the way we are expecting to reach Viksit Bharat, jointly we need to address some of those environmental concerns. And here we have to come to we have to find an alternative. Of course, Manjit ji was talking about the finance. Of course, we need to negotiate in a group to get more funding from Europe for green investment and others. But at the same time, we had a couple of local institutions. Let's say in India has experimented a couple of institutions that work rebuilding forest, joint forest management, one of those examples, where local people were given some kind of access to the forest. They will be having full access to the NTMP, non-timber forest resources, medicinal plant and other kind of things. And at the same time, they could frequently harvest whenever the tree would be grown. That kind of experiment, helped a lot to regenerate forests. But if you look at that, the kind of natural resources that inherited by Nepal, if you think that the Nepal should also grow as an industrialist economy, that cannot solve the problem. Do you want to really see that Nepal should also, build all those kind of industry that we are also having? We should not actually think of. Rather, we should allow them to rely on some of those industries that are friendly to the resources, so that, ecology that is being preserved by Himalayans should also be preserved to some extent. So that's the reason why those kind of institutions has to be, revived, or rather should be encouraged. If you give much more empowerment to, let's say, local institutions, and of course there are to some extent market principles applied when you are also giving access to the local institutions, then that can be much more effective than planning from the centrally by states. These kind of issues definitely has to be. Otherwise we cannot actually grow because of the environmental concern that we have talked about. And then I'll finish. Now there are social sector issues. We talked, many of you have spoken about the health sectors and a kind of, let's say, a health sector infrastructure that you require without having cooperations, disasters management. Their common research are very much required to preserve resources, and so that we can protect ourselves from the frequent climate changes. So I'll stop here. If there is questions, I will come back.
Thank you very much. Maybe conclude. All right, so great, 4 great presentations. Thanks to all of them. Let's give them a big hand. And unfortunately, we have run out of time, so we can't have some Q&A. Therefore, we'll move on to the final valedictory session.
So thanks to the chair and the panelists. So we have, before ending this, we have small token of gratitude for the chair and the panelists.
Yes. Wonderful. So we have one panelist, one host.